So yesterday was one of those days that just feels off, right? On the surface, it looked like a huge win. We saw this incredible V-shaped recovery that erased some massive losses from earlier in the day. But if you look just under the hood, the market was actually flashing a huge warning sign. So let's deconstruct what really happened.
And I've got to ask you this straight up. Looking at that wild comeback, do you actually buy it? I mean, did anything fundamentally really get better? Or was this just kicking the can down the road? Because believe me, how you answer that question changes everything about your next move.
And here's the bottom line for our entire analysis today. What we all witnessed yesterday was not a crisis being solved. Not even close. It was a crisis being delayed. The market didn't rally because the danger disappeared. It rallied because the deadline got pushed. Understanding that one little difference is absolutely crucial.
Now, this is where you can really see the contradiction I'm talking about. Just look at the S&P 500. It finished almost perfectly flat. You'd think, okay, boring day. But right below it, you've got the VIX. That's the market's fear index, and it spiked over 6.5%. At the same time, bond yields dropped, which means big money was running for safety. So you have the stock market kind of shrugging its shoulders, while the fear and bond markets are screaming that there's danger ahead. That is a major, major disconnect. And that brings us to what I'm calling the deadline market. The entire trading day, literally every tick up and down, wasn't about earnings, it wasn't about the Fed, it wasn't about economic data. The whole market was held hostage by a single geopolitical timeline playing out in real time.
I mean, just look at the play-by-play. The market sells off hard as this deadline gets closer. Then we get a report from the Wall Street Journal saying talks are breaking down, and boom, the S&P hits a low of down 1.2%. Then, late in the day, a single piece of news comes out. Pakistan's prime minister is asking for a 2-week extension. And just like that, everything reverses on a dime. The market didn't price in a solution, it just priced in a delay.
And that's the key phrase for today, right? Timeline extension. Let's be really clear. This isn't peace. It's not a deal. It's a tactical pause. It's a way for both sides to save face, to avoid making a catastrophic decision right now. But it fixes nothing. And that entire V-shaped recovery we saw, it was built on this one fragile, temporary idea.
And, all of this drama isn't happening in a vacuum. It's playing out on top of too much deeper, scarier, and conflicting fears. Right now, the market is literally being ripped in two opposite directions.
On one side, you've got these growing fears of a recession. We're seeing it in weakening economic data and in those falling bond yields we just talked about. This camp is thinking the Fed might actually have to cut interest rates soon to save the economy. But on the other side, you've got this massive fear of inflation and geopolitical risk. The VIX is high, oil is still stubbornly over $110 a barrel, and this suggests the Fed might be forced to raise rates to fight off rising prices. A slowing economy plus rising prices, that, my friends, is the textbook definition of stagflation. It's the worst of both worlds.
And the next big gut check is literally just around the corner. The forecast for the upcoming March inflation report, the CPI, is a hot 3.4%. That is a huge jump from last month. And if that number comes in high, well, it could completely tie the Federal Reserve's hands and just pour gasoline on the market's inflation fears.
But you know what? Even on a day full of geopolitical chaos and economic anxiety, it wasn't all red. There were some clear pockets of serious strength. And it's really crucial to see where the money was flowing, because it tells us that even in this crazy macro environment, a good company-specific story can still win the day.
And here are the big ones. Look at AI. Broadcom shot up 6% because it locked in a massive long-term AI chip deal with Google. Over in healthcare, United Health and Humana jumped big time after getting really good news on government reimbursement rates. And even in semiconductors, Intel got a nice boost from a new contract with SpaceX and Tesla. This just proves that individual company fundamentals still have the power to cut right through all the noise.
Okay, so you take all of this, the geopolitical drama, the economic tug-of-war, and you have to ask, what on earth do I do now? Well, let's walk through a clear, disciplined framework for how to approach this exact type of situation.
First things first, we need to internalize the single most important rule for a market like this. I call it the IV primacy principle. IV just stands for implied volatility. It's what the VIX measures. It's a fancy way of saying fear. And the principle is simple. When the VIX is high, when fear is in the driver's seat, the number one rule is to freeze. The best move is often no move at all, because reacting to every headline just leads to emotional mistakes.
So let's break this down into 4 simple actions. Your game plan. Number 1, do nothing. Seriously, with the VIX over 25, you freeze.
Don't add new positions, don't sell existing ones out of panic. Just freeze. Number 2, get ready for that big inflation report. Have a plan for what you'll do if the number is hot, and more importantly, what you won't do, which is panic sell. 3, hold on to your hedges. Do not sell your energy stocks just because oil dipped a few bucks on some flimsy ceasefire rumor. The trigger to sell isn't a price change, it's a fundamental resolution, and we are not there yet. And finally, number 4, watch the canaries in the coal mine. Keep your eyes on key companies like Broadcom. Their business tells you if big tech is still spending big on AI, and that's a key engine for this entire market.
So what's the big takeaway from all of this? I'll leave you with this one thought. Right now is not the season for planting new seeds and being aggressive. This is the season to protect the crops you already have in the field from a storm that you can see brewing on the horizon. Be patient, be defensive, and wait for that storm to pass. Only then, when the skies are clear, is it time to act again.